The stock market bull breakout continues with SPY now trading in the 440s. First up, let's take a look at a daily chart of the S&P 500 SPY ETF. So let's crack open this chart, see what's going on in the stock market today. Alright. First things first, we're going to go back in time to last week on Friday because we were getting a bull flag on SPY, and I gave a very simple trade plan while SPY was in the breakout above 430 on exactly what we would likely see moving forward. So let's jump in our time machines and go back to that clip right now. However, on the bullish side, if we continue higher, this break above 430 is a bull flag breakout, which easily takes us into the 440s. So you cannot be bearish above 430. You need to wait for support to be lost and then let the price action guide you to lower prices. Alright, so the reason I want to revisit that clip is because on the chart, we had all of the information we needed, which was the break of that bull flag above 430. And I even said it looked like blue skies above 430 because I didn't see much resistance until we got to the double bottom price target in the 440s, and that's exactly where we got today. Now, I still think this level at 436 is an important level, and we could now possibly see that level acting as support now that we're breaking above it. But without a doubt, SPY above 430 was the correct call that we were going to see this impulsive breakout because we still have way too many people shorting this market, and this was short squeeze territory. So if you shorted above 430 and you didn't wait until we got to these higher resistance levels, by now you have likely been squeezed out of your position or you're sitting on some massive losses. That is not what I want you to be doing when you're looking at the chart and you see a bullish breakout. You need to respect the price action because it's telling you it wants to go higher. And I've been telling you this is important because we have the bull trend. Anytime you get a bull breakout with a bull trend, the path of least resistance is always going to be higher. So when you're looking at the volume, it's always increasing now that we're breaking out because a lot of short sellers are now covering, which means they're becoming net buyers. Now, if you look at the options market, it's a totally different story. And I know there's a lot of calls and we're getting extremely greedy on the 5-day moving average for puts and call ratios. But if you look at the net short positions, there are still a ton of short sellers in this market who are trying to short the S&P 500. Now, moving forward, we still have the bull trend. So it's the same suggestion I always give you is you need to wait for price to break down and show confirmation that we're going into lower highs and lower lows before you get overly bearish. If you are simply shorting the market just because we're going higher and you don't think we should be going higher, that is a great way to lose all of your money if SPY just rallies all the way back to all-time highs. Now, if you don't think all-time highs are possible, just look at a monthly chart of XLK, which is the tech sector component of the S&P 500, and you can very easily see that it is now trading near all-time highs, which means the whole entire stock market is likely lagging the tech sector, and the tech sector is simply leading the way higher. So if you still have a bear bias and you're still in this camp that the stock market is still in a bear market and it's going to crash, you are playing with fire because the charts are telling us quite the opposite. Now, that doesn't guarantee we won't get a cool down or a correction or some type of pullback, but what I'm trying to teach you is don't guess when that's going to happen. Let the chart and the price action do all the talking. So what that means is we simply need to see a shift of this trend, which is going to require some patience and a little bit of due diligence to watch the price action and get confirmation of the rollover. So right now with SPY breaking above 440s, there's no doubt we're getting overextended, but most of the time this year when we're getting these overextensions, we just simply go sideways and barely down with very small muted drawdowns of a small pullback before we go any higher. So if you get in the habit of trying to call every single top, you are literally taking the hardest possible trade that you could possibly take in this market. Because we have a bull trend, you should be buying at support and trading with the direction of the trend for a much smoother ride. Now, if you want to short SPY, then you need to have very good risk management because the next price target I have on SPY is up there between 448 and 451. So yes, it is possible we're going higher because we still have the bull trend and we still have bullish price action above all the moving averages. Now, one day the market is going to pull back and one day we will see a correction in the big tech sector, but trying to guess when that's going to be is a lot more difficult than just simply waiting till price action tells us. So right now you don't have to stay bullish on this market, but you should be very cautious if you're shorting it. And I'm not saying don't short the market. If you have a strategy and it's working for you, that's just fine. But generally speaking, that is going to be the most difficult trade you could possibly take with this bull trend. So respect these levels that we have here on the chart right around 441 and 436. And the next upside price targets will be 448 and 451. We're still bullish above 430, but that doesn't mean we can't get a pullback all the way back down to that level to test it as support. And that would still look like a higher low within a bull trend Even if we bounce from 430 and then continue to 450, that is still a very healthy bull market chart of higher highs and higher lows. So stick with the trend until the end, because the trend is your friend and you never know when the trend is going to shift. That's why we follow price action, and that's why we look at these charts each and every day. Jumping over to the NASDAQ 100 triple Qs, we were up 1.19% today, and we slammed into all of my price targets at 368 and just above 371, and so far we are holding up at that resistance, and we are well outside the bear cave, which is between 350 and 360. Like I just showed you earlier with the XLK chart pushing near all-time highs, it's very difficult to say XLK is going to make all-time highs and the triple Qs are not. And if you zoom out on the triple Qs, we are still about 10% away from all-time highs. So while I'm not guaranteeing anything, the bullish trend and the bullish price action allow us to keep climbing higher as long as we have it in existence. And as you can see, we're outside the bear cave, which likely means this is no longer a bear market. So for the sake of cleaning up this chart, we are going to delete the bear, because we are officially outside the bear cave for at least 3 closes, and we are now pushing to higher prices, which means we are likely going to continue higher even if we get the correction in the pullback. So just to illustrate this, even if we went through a drastic correction all the way back into the 330s, I would still expect to see a resumption of this bull trend, barring any black swan events or significant shifts in the current state of the economy. But remember, we follow price action and the chart over everything else. So right now, looking at the triple Qs, there is a very good chance this level of resistance that we're currently in is a very strong resistance, but we need confirmation of high volume selling and a rejection, and then a shift in the trend of higher highs and higher lows into lower highs and lower lows. Without the confirmation in the price action that we're shifting the trend, we need to stay on this bull. Also pay attention, we're still squeezing out bears on higher and higher volume, which tells us after we squeeze out all of the bears, then we very likely could get the pullback, and that will cause max pain in both directions, because once the bears get squeezed out, then we turn around and continue to lower prices, and they're left sitting there wondering what the hell just happened. On the triple Qs, watch these resistance zones between 368 and 371, and I would give room to get all the way up to about 372.5 to about 373. If we start to pull back, we need to break the support at the 5 EMA around 365, and then below that, we could look for a retest of the breakout at 355. On the Dow Jones, we were up 1.28%, continuing the bounce of the break of that resistance at 341 with the next upside target at 346. And we're making higher lows and higher highs ever since we had the breakout above resistance at 336. On the Russell 2000 IWM ETF, we were up 0.82%, and the Russell does look like it could be building out a bull flag between 184 and 188. So the break of this range is going to tell us the next move, and it's likely going to be at least a $4 to $5 move. Above 188, I think we push all the way to 195, but we need confirmation of the breakout above that resistance. And below 184, we'll likely push back down towards 180. On the ARKK ETF, we're up 1.07%, hitting that resistance yet again at 44.5. And if we break that resistance, we'll be looking for the price target just below 46. And we have downside support at 43 and 42. On the VIX, we were up 4.47%, still trading below 15, and there's really nothing else to say on the VIX until we start seeing the VIX spiking out above 20, because even if we get volatility in the VIX between 14 and 18, that's just a regular normal bull market, and even if we get a pullback, we'll likely not see the VIX above 20. On Bitcoin, we're currently up about 0.67%, getting very close to our price target at 24,000, and we're not getting bullish until we break to a higher high above 28,000. We still have the bear trend, so respect it. On Amazon stock, we were up 0.55%, pushing higher towards that price target at 128, and if we break above it, we're looking for the next targets higher at 133 and 134, and you're staying bullish above supports at 121 and 123. On Microsoft stock, we were up 3.19% today, and Microsoft is one of those stocks that is likely pushing higher towards all-time highs, because we just saw that happening in Apple and NVDA, and Microsoft is no different. If we zoom out, we can see Microsoft is pushing the all-time highs from back in 2021. So I continue to tell you, this begs the question of why are people still calling this a bear market when we have big tech names like Apple and Microsoft breaking out to all-time highs. This is all happening on increasing volume, and the next upside targets are going to be 351.5 and 360. On Microsoft, you're bullish as long as we're above the breakout at 336, and if we get a pullback into the breakout, that level could be support for a higher low before the next higher high. On Tesla stock, we were down 0.35% today, getting very close to the price target at the gap fill at 262, and above that, we have another price target at 268, but we are looking a little too far overextended, so once we hit these price targets, I think it's possible we come down here to close this gap at 235, and as long as we hold above the support at the breakout at 230, it's possible we still have the bull trend. and that could be a higher low before the next higher high. So continue to ride the wave, and in Tesla, you can stay bullish as long as we're above 244, but below 244, we're likely closing the gap at 235. On Apple stock, we were up 1.12% today as Apple continues to break out and close at brand new all-time highs, which is exactly why Microsoft is likely doing the same. This is another bull breakout above 185, and we're bullish above 182. And if we break down below 182, we're looking for support at 179, 177, and the gap fill just below 176. On the financial sector, we were up 1.32% today, and we're finally getting the test of the 200 daily moving average, which is right there, right around 33.6. And if we start breaking above the 200 daily moving average, this is going to look like a higher low into a higher high breakout. That could send us to higher prices, even though we do have gaps below. A break of the 200 daily moving average is very bullish. The industrials were up 1.5% today, getting very close to the price target at 106. And remember, we're bullish above the breakout at 101.5. The healthcare sector was up 1.55% today, breaking out to another higher high after a higher low, and we're very likely heading towards the price targets at 134 and 137. The energy sector was up 1.1%, still finding resistance at the 50 EMA, and we're getting very close to a breakdown if we break the support at 79.8 to go fill the gap at 73. But if we get a breakout above 82.5, we're likely going to fill the gap at 83.72. So jumping back over to the S&P 500, the market continues to prove why it's so important to follow the trend in the price action and not do any guessing or have any bias about where the market should be going. If you've been following price action this year, you've been doing very well because the chart has been broadcasting its next move before it happens. We're now in some very critical resistance zones, but as you've seen before, that doesn't guarantee we can't push higher, so let the price action do all the talking. Don't forget I have my own trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and I also have the Stocks channel Discord where you get access to all of my intraday updates and analysis. You can find out how to join either service by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.